All right, ONDK, New York Stock Exchange, ondk Capital Inc. That is a cool name. All right. That's another fetch from stageanalysis.net, US stock screeners. And check out this beauty, guys. I don't have any data. At least I have. I think it's in December 2014. So that's what we're going to be dealing with, about 3-4 years of data. Remember, scoot everything, center it, black space. Don't let yourself influence by the borders. The outline of your chart, there you go. Make it big. Get a little precise. There you go. Awesome. So you see, now you can imagine the price going upwards, downwards. Let's see where my monthly candled defined support is. I like starting at the extremities. Ooh. Is this a breakout candle? Is this a breakout candle? And after that, remember, after that, there's smaller patterns with for bigger ones. Each with their implied measure moves, creating bigger patterns, getting into turbulence where there's resistance of borderlines of possible of the bigger patterns. Then you just wait, see how the chart morphs. And that's the beauty of charting, guys. If you keep it simple, and simple I mean what you see in candles, you can't get simpler than that. Chart, no SMA, nothing. Then you could really focus your energy. Your brain it'll happen naturally. At the beginning, you're in survival mode, and you're just trying to draw lines. How do I draw my resistance, my support? And after that, your brain starts seeing things, and you start understanding more, and you're able to come up with some theories. And after that, over time, you check them out, and you observe, and then you go see other people with their frameworks, and they're noticing the same behavior, but they're not looking the same way as you. That's why I never judge somebody else's framework. You could frown upon them if they don't apply risk money management protocols. You could say, hey, come on, your system's good, but you gotta at least apply that, Never judge. And here we are today. All right, let's see, using my classic chart trading framework, where my implied measure moves are. Is that one? Here. The closer the target, the more probable it is. Is that another target here? More further away target. And is this another crazy target? I draw a whole bunch of stuff. I don't feel judged. I don't care. I just do it. And after that, I say, Pat, yeah, that one's less, it's kind of weird. Doesn't, sometimes you draw lines, it's not the perfection, and then you figure it out some other way. Just notice here, this is zone of this previous support and resistance right here at the 670 level, and just beware it's there. It could be an occasion for the price action to pull back to the breakout line at 575. So we're going to go zoom in on the 5-year weekly to do Stan Weinstein stage analysis. These are primarily the candles we're going to see in the stage 4, stage 1, in the stage 1 there, early stage 2. 1, 2, 3, 4, 5, 6. Remember, these are monthly candles, so it's like 6 months worth of data. And we're going to see the price action go up above. This is going to look pretty much like the resistance here, breakout level. And sometimes the price action, if it starts going down, and you don't understand why, because you just have 5 years of data, or you don't see that previous monthly defined resistance. knowing us that we're running through it now gives us a few opportunities or a few reflections. Do I enter right here? Do I wait for the pullback to the breakout line? Where's the breakout line? Well, here's monthly defined support right now at the 575. So it has a pretty good chance of bouncing through that, or at least not closing below it. So you might have eventually up on the pullback a candle that's going to go down. It could go down really low, so don't get greedy. Monthly candles, the targets, your sell stops are far away, but I've seen some crazy candles, guys. Go fetch your... The monthly candles, the strength is the close and the opens, defining those resistance and breakout lines, those support and breakdown lines. But the wicks is a noise. So on the weekly, on the daily, that noise is in the wick of those candles, and they could go down low, guys. But market, what matters is the close and opens. So right here, could have a pullback, price action could go all the way down, and if you have the trader's way or something and you get triggered out, it could happen. And the close could get sucked back up here. And then after that, you could enter here if it's on low volume, contracting volume on the way down. And if you want additional safety, then you just wait for the next green candle to confirm that was essentially a bottom, right? Red candle, red candle, red candle, red candle, hammer or doji, and then green candle. Right? You never know it's the high until there's a low right beside it, right? Or, yeah, that's how it works. And same thing for lows. You don't know it was a low point until you start moving back up. So that's how I see it on the monthly candle chart. It broke out, confirmed last month. Almost reached its target on its closest target. And after that, you make a bigger pattern here. And if you use the top to bottom from here, you have a further away target. Let's put some, and after that, if you want to include this as a high, as the part of the formation, then you had to have this crazy target that goes all the way up here that I added to this breakout line, which brings you all through this resistance here, all this resistance zone here, to the high here, and below the next wall. Further away the target, the least probable it is. And that's the beauty of stands. It's not the targets, you're adapting your sell stop, moving it along the way. If there's heavy resistance and the price pulls back and starts reversing, and well, you have your sell stop that moved up, you get triggered out. But if it goes through like butter, through these possible resistance areas, then you just keep moving up, trotting along. And that's why I was kind of attracted to come back to stand analysis, is I wanted to ride those stage twos. Classic chart trading, implied measure move, added, lock and load. And that's it, reach your target, then you reach it, you have to wait for another formation. Move stands way, well, you get to ride those waves a little longer. The last years, well, if there's no major whipsaws, you're able to stay in those for years, guys. The mega profits. All right, I'm on the weekly. 575 was my monthly defined breakout. And I'm just going to clear all this out, move all trend lines. Ichimoku cloud, remember guys, if you're under the green, that's support, trend upwards. If you're under the red, going down, downtrend. And when it starts flattening out, the green and the green and the red getting thin, that means you're in a stage 1 or stage 3. And the support or resistance is just diminishing and slowly has no more value. That is Ichimoku cloud defined support and resistance. Oh, Ichimoku cloud. Look at these candles. Is the breakout here? So there could have been a breakout right here at the 560 level. This candle here, that could be the breakout. I wish I had the Mansfield indicator, but I don't. I have the RSI. And I still notice when it's above 50, going upwards, It often coincides with a breakout candle volume, twice the average volume of the previous 4 weeks. Breakout above, horizontal breakout line. 30-week moving average going up. And look at that tight formation. This is a nice one. This is 1, 2, 3 weeks ago, guys. This was an awesome breakout right here. If you don't want to go in, look at that contracting volume on the red candle, and then starting to pick up steam. Breakout, which explodes in another breakout. Love it. 40 to 50% move before you get in. 30-week moving average starting to angle upwards. These are the signs, man. Don't say, it's too late, I missed out. What? The more it moves up, the more that it proves that's in the trend. That's where you want to be with the trend. At the beginning, it's embryonic. Anything could happen. It's shaky grounds. That's why you're looking for these signals that stand isolated. His Mansfield indicator, the strength of a stock against its index. I'm using the RSI, strength of the stock against itself. That crazy volume, 2 times the average previous 4 weeks. And that 30-week moving average, horizontal breakout line. Guys, this is the confidence or the triple or quadruple confirmation you need to get in. But the more it moves up, the more it angles up, the better it is. Remember, if the week average is starting to go up, before it goes down, it has to go into neutral territory and then down. If you buy a stock and the 30-week moving average is flat, then it's just one step away from going down, guys. So what do we do here? Do we enter? We saw that this was a monthly defined resistance at these levels. Do we wait for the pullback at the breakout line? This nice breakout line back here on low volume. If you enter here, your sell stop, you have to put it all the way down here. You could put half a position here. And after that, if there's a pullback on contracting volume again, then you could take another position here with your sell stop down here, and then you're in stand. All you have to do after that is go check out my previous podcast, the early ones, and I go through how to move up your sell stop, the trader's way, the investor's way. And that's all she wrote, man. ondk is pretty sweet. I like it. Yeah, I think the stand breakout happened here at this candle here. How much volume is this one? 3 million? No, 2 million. Yeah, it's not, because of this candle, it's not twice the average of the previous 4 or 5 weeks. But it's not bad. Just want to take another peek at the monthly candle chart. And yeah, we have a breakout here also. Guys, it's confirmed. There's a good case for an entry here. At least half a position. And wait for that pullback if you want to add on. Cool. Thank you, Isa Trader on stageanalysis.net. Man, you're making my life so much easier. The screener is awesome, guys. All right. See ya soon. Ciao.